Hi. Let's learn about anchoring in investing. Anchoring is a cognitive bias in which people rely too heavily on an initial piece of information when making decisions. In the context of investing, this could mean using the purchase price of a security as a reference point for future decisions about that security. For example, if a security is bought for $100, the investor might be more likely to hold onto it, even if its value has decreased significantly. Anchoring is a cognitive bias in which an arbitrary benchmark, such as a purchase price, carries a disproportionately high weight in decision-making. In investing, this can lead investors to hold on to investments that have lost value, rather than re-evaluating them based on current fundamentals. Market participants often attempt adjustments to reflect new information, but these adjustments can still reflect the bias of the original anchor. An anchoring bias can cause investors to make incorrect financial decisions, such as buying overvalued investments or selling undervalued ones. It can be present throughout the financial decision-making process, from forecast inputs to final output. Historical values, as well as arbitrary values related to achieving certain objectives, can serve as anchors and distort rational decisions. Anchoring bias can be seen in everyday life, such as in sales negotiations or price haggling. In investing, traders might become anchored to the purchase price of a security, leading to poor decisions. Analysts may also be anchored to previous index values when making predictions. Anchoring bias can influence decision-making in various scenarios. Some factors can mitigate anchoring, such as raising awareness of the bias and advising people to consider the opposite. However, it is difficult to completely avoid anchoring bias, even when people are aware of it and try to avoid it. Experimental studies have shown that the effect of anchoring can be reduced but not eliminated. In sales and price negotiations, setting an initial anchor can influence subsequent negotiations in your favor. For example, starting with a higher price than you expect to get can lead to a final selling price that is higher than if you had started with a fair or low price. Similarly, in hiring negotiations, using an initial salary proposal as an anchor can influence the final agreed-upon amount. The anchoring and adjustment heuristic describes cases in which an anchor is subsequently adjusted based on new information until an acceptable value is reached over time. However, these adjustments often remain too close to the original anchor. This can be a problem when the anchor is very different from the true or fair value. Here are two key takeaways. 1. Anchoring is a cognitive bias that can lead to irrational decision-making in investing and other financial scenarios. 2. Setting an initial anchor can influence subsequent negotiations in sales, price, and wage discussions. Hope this would help. Thanks for watching.